All right, got the YouTube live going and the TikTok live. Also notified the individuals on Discord, so we are ready to go. We're gonna wait a few more minutes, but it'd be an interesting one today. We're gonna basically just look over a bunch of different charts, many different asset classes. We're going to get into equities first off, looking at different indexes around the globe, looking at Dow Jones, SPX, and then we'll move over, let's say, to FX, foreign exchange. We're going to look at some FX pairs that are paired with the US dollar, and then we'll go over some crypto and then metals as well. So we're going to do a little bit of everything, but if you are watching the live global macro update, we do have a recorded version with timestamps included in the little comment section below for you to navigate where you want to find specific charts that you are looking to maybe get a second take on, or our opinion on, or whatever the case may be. You can find more information down below, and we will have that available after we make the video, and then we go over and then recomment the timestamps that are needed. So let's get this going. Gonna get my recorder, and let's get this started here. Global macro update. Do you see it? Yes, I do. All right. Hopefully TikTok people can zoom in. Also, if you are watching this on TikTok, we do have a YouTube live currently right now that is playing. That is obviously a lot better quality than what you're currently seeing, just to let you know. Hey traders, welcome to another global macro update. We're going to do a lot of charting here today. Going to be looking at equities, FX, commodities, as well as some crypto. Kind of got to do the whole asset class that we kind of look at as a team here. So first things first, let's kind of look at the global indexes. We've got a bunch of different line charts here. I'm not really going to get into the technicals of every single one, but just an overview around the globe, looking at different indexes and seeing how they're faring with that huge sell-off that we had back in early March. So let's start off at the very top here. This is going to be the Japanese index, and we're just going to be doing some quick fib retracement levels to see if it's over, above, or below the 50% zone. So we go to the very top, and then we go to the bottom of the line. Definitely see that the Japanese index is over the 618 and clearly making some significant moves towards the upside here. It was consolidating for a while, but that strong push to the upside really showed that there is now some bid volume coming into the market. Next one's going to be the TSX, which is the Canadian index. And we do see it did pop off a little bit higher. We were kind of slowing down back in April, and then we got a strong push to the upside. We held that level of a resistance, and now we made a lower, less higher high, but we still made a higher high. So it is moving towards the upside, creating higher highs and higher lows. And we definitely made a higher low from this previous low. So TSX is definitely still moving towards the upside. No real sign of true weakness yet. There's definitely a slowdown in terms of how aggressive the price is getting pushed up by the buyers. But overall, we're still seeing higher highs and higher lows. All right, next thing we're going to be looking at is the DAX, DAX, which is the German stock exchange index or stock index, and we can see it's made a very strong push to the upside here after it was almost in consolidation. It was forming higher highs, but getting very weak as it's getting less and less aggressive, but that strong push to the upside really signified that there is decent amount of buy volume coming into the market. And let's just see what the retracement is from this. Just crossed the 618. Let's just say it is still hitting that key zone. And we can see it was a previous level of a support turning into a key level of resistance in confluence with the 618 key level of resistance, which is the main area that we are looking for some level of supply. Next thing we're going to be looking at is this is the FTSE. So this is the United Kingdom index, basically. So then we can see it's actually does not look like it is being as bouncy to the upside. It hasn't even hit that 50% retracement, which is definitely showing some weakness within the United Kingdom compared to its counterparts, for example, the DAX in Germany. But it is still forming higher highs and higher lows. It's not really getting that aggressive push, but we did make a higher high, and we have been making pretty consistent higher lows. Next thing we're going to be looking at is the Chinese stock index right here. It's a little bit awkward looking, but yeah, it definitely is less significant of a move to the upside. But overall, let's just see the retracement levels that we're seeing here. Just at the 618, let's say that 618 is a key level of resistance, and we did fall when some other indexes are actually moving towards the upside here. So we can see that it's a little bit weaker compared to some of the other indexes that we have been seeing. If we just draw that nice little trend line here, can indicate that could indicate some weakness. And then if we are able to create a level of confluence within that same zone, we could be looking at a potential break in a pretty significant area. But that's the Chinese stock index. The next one is going to be the big S&P 500. It's one of the best rebounds of the indexes. NASDAQ is greater with the tech stocks, but we can see that it is way beyond the 618 level, making a strong push to the upside here, breaking that descending zone that we have been talking about from this point here. Made that nice little squeeze just above that 618 level, and then it pretty aggressively moved to the upside, and it's been on a slow climb since. And then the next one, and I believe the final one, is going to be the Russell 2000, which is the small caps. And it was struggling for a little while here, but it did make a strong push to the upside where the environment turned to a risk-on type of environment in which people are more eager to speculate. You know, there's hope, there is optimism in the air, and there definitely seems to be more bids in more speculative assets. We see that it did break the 618 level, did retrace and come back into it, testing that zone as a resistance and holding that below the key zone. But as of right now, we are still making some strong moves towards the upside, making higher highs and higher lows. So overall, we're definitely not seeing as much strength from Europe. America is definitely taking the lead, in my opinion, in terms of the strength coming back. Germany, the DAX, is moving pretty aggressively towards the upside, breaking the 618. But overall, it does look like the SPX, NASDAQ, is taking the lead here in terms of the bullish push. Japan actually had a pretty good, significant move recently. But overall, there's not a lot of indexes that are in that really dangerous zone of potentially hitting the lows. I think the closest one that we've looked at right now would be China, where it's got a significant lower low than the previous base that it's formed, whereas basically the rest of the other indexes are either making significant higher highs and higher lows, or gradually getting a little bit weaker, but still incrementally making those higher highs and higher lows. All right. Next thing we're going to be looking at is a few larger charts with some candlesticks here. This is the Dow Jones. We're just going to be looking at the... we haven't looked at the Dow Jones in the previous chart, so this is what we're going to be looking at right now. We did see that there was a floor made at around 23,000, and there was a potential head and shoulders after the price blew through the right shoulder. Definitely that trade was invalid, and I think a lot of people who were potentially shorting got squeezed out, and then we got that strong push to the upside, breaking that 618 level. And now today it does look like that price or that daily candle is holding that 618 as a new level of support, indicated by that wick to the downside, the buyers coming back in, pushing the price right back towards that 618 level. And if it closes there, and if it closed green, that would be a really bullish sign in my personal opinion, where you break through significantly. You see that the price opened here, came back down, but then it ended up pushing above that 618 level. That was an important day, and then the bulls won that day, that battle, and then we got a retest. And then if this next daily candle closes green, that would be pretty bullish in my personal opinion, although I'm personally not really looking to long indexes right now, and just too much uncertainty. You're basically hoping that the Fed will save you, and the fundamentals don't line up in my personal belief. And the people who are longing, saying that this is a really good opportunity, is basically assuming that the Fed can print more money, pay for assets in order to create a bid, and falsely aggregate the amount of buyers that are in a market, which is not a free market. So I'm personally not really interested in that. I'd rather look at what I find more interested interest in, which is metals and crypto. So we're now, let's look at the DXY, which is the US dollar index. It fell out of its squeeze, although I'm not really going to completely say that it is going to have major weakness. I think the dollar milkshake theory could still play out, although this is a short-term technical breakout to the downside, indicating weakness within the US dollar. This is in part due to the fact that the euro is actually moving towards the upside, due to the fact that it's kind of odd. They print more money to create stimulus for the pandemic, and that's a bullish thing for the euro, although you are debasing the currency by a significant amount. It's like $810 billion, 750 billion euro or something that they've printed. A lot of money. But anyways, this DXY US dollar index is comprised of 60% euro, I believe 15-ish percent GBP, and then you have some Swiss franc, some krona, and some other smaller currencies, but it's heavily dominated by the euro, and obviously, if that does well, this chart is going to go down, and that's exactly what we saw here. I'm not going to assume that we're going to have a huge move down for the dollar. I don't want to call that just yet because I think we could see a surge in strength, but if there is another liquidity event, there will be a move into the dollar, because last time that's what happened, and I think that there's no real sign of inflation, really. If you're looking at the velocity of currency, it is slowing down so much that it is offsetting the amount of money printed to some degree, in my personal opinion. So I think that there will be deflation and strength in the dollar before inflation, weakness in the dollar, people worrying about losing purchasing power and then moving to safer, more, hard assets like gold, silver, and Bitcoin. So that's going to be my personal view on the global macro scale, but on the technical scale, or the technical side, it does look like a DXY is definitely weakening, which would mean that the US dollar is weakening against major currencies. We will get into the FX side in this video very shortly, looking at the more exotic pairs, like we can see right here. So this is now going to go into the FX side of things. We have the South African Rand, which is ZAR, Z-A-R, paired with the United States dollar. We have the Mexican peso paired with the US dollar, and then we have the Australian dollar paired with the US dollar as well, and then we have the Turkish lira. So we're going to go over these 4 different currencies. Got to understand carry trades if you are looking to long these, obviously, because it does cost money, compared to if you are looking to go and long a exotic pair or exotic currency and then short the US dollar. You can actually get paid for that, but not really going to get into that too much. We're just going to get into the charts here. So the first one we're going to get into is the US dollar versus the South African Rand. So let's go and zoom out. First things first, it had a massive move towards the upside here. So let's go on the daily. We can see a huge move that occurred from, let's say, January of this year. It had a massive move up, and it did have a pretty strong pullback after a nice triangle and a squeeze. But what we're looking for is a potential strengthening of the dollar, which would then mean that we are going to be longing this chart and continuing the momentum to the upside. I'm personally not really looking to short this. My bias is going to be long, so I'm going to patiently wait until we do have an opportunity where we could capture some good risk reward situation. So that's going to be my viewpoint, but in terms of the large time frame, it does look extremely bullish. If we do see all the way, if we are zooming back since 2008, we're getting these big swings here, and we just had a massive boom to the upside, and this could be a potential continuation pattern if the global investors worry and we get another second wave, or we get some fundamental factor that creates more fear, uncertainty within the market. People will fly into the United States dollar like they did last time, in my personal opinion, which would mean that this would have a strong move to the upside. In a global pandemic, and when you are looking at 2 different currencies, what are you going to want more? Are you going to want something that is transacted worldwide on a global scale, which is a medium of exchange of almost every single commodity traded globally, or the South African Rand, which, if you're looking at that fundamentally, I think it's pretty obvious as to what will get more demand in the long term, as long as the world reserve currency is the United States dollar. All right, so that's basically my take on the USD ZAR pair. Let's now dive into the price action and just get our snip. And let's just talk about some TA here. So what I currently see is we initially had a descending trend line and an ascending trend line, creating a really nice squeeze. I was looking for the price to potentially do something like that where we get a squeeze, we get a break to the upside. We got a nice really key zone of resistance that we were looking for. Unfortunately, it did break to the downside, so we held off. I didn't really want to look to trade to the downside personally, just because of fundamentals. I was don't mind patiently waiting. I was trading some precious metals in that time, but at the end of the day, we still have a potential trade that we do see. Our first potential area of support that we do find, or did find, was the horizontal zone. That was our most key area. You see that there was a lot of buy pressure there. There was a potential head and shoulders, but that got validated or invalidated. We broke the potential right shoulder, and then we retested the head as a new level of support, and then we blasted off, making a significant move towards the upside. So we can identify that this just above that $17, let's say $17.25, we'll see that when we get off this snip here, but this zone right here is a very, very key zone, and we can see it was a strong level of support when we did start to curve and form that nice base. So I tried to find some levels of confluence that would be in line with that. So then we got a nice level of resistance, support, and then we got a potential third touch right here. And then we also have an expanding price action pattern if we have the resistance turn to a resistance, support, and then we also have a nice level of support. So I'm trying to find this nice level of confluence around the 17.35 range for USD ZAR. And if we are able to have that as an area of support, that could provide a pretty good risk reward situation where the next area of main level of resistance would be this descending zone. So then you'd have some level of a descending channel, and then that would be your midpoint, and then you'd be looking for a potential move from the low of the support kind of around here into the high of the resistance, and then definitely you'd be looking to take some off because that will be a big worry for a key level of resistance. And if it does break, obviously that's great, but that's going to be my viewpoint. And let's now dive into the smaller time frames to see what we can identify for potential here. So, all right, let's stick to the 4 hour because it's good to kind of get a good understanding of what we see on the larger time frames. All right, so let's first identify horizontal zones. We initially had this key level of support hold multiple times, create a base. That base broke and turned into a new level of resistance. That's going to be our key zone that we'd want to break in order for us to even think about potentially looking for a long opportunity. We see that if that does break, we do have a nice well-rounded bottom that we could be creating, and then this key level at around 17.6 would be the major level that we'd want to see break, create a higher high, create a higher low, and that would be kind of the structural previous ceiling new floor within the floor of the price action. And that would be, in my opinion, a pretty good location that we could look for reversal patterns, because not only did we break the market structure, creating a higher high and a higher low, but we also look at descending zones like this one. Let's take all that out. That's our final descending zone, and then we also had one that was connecting these lower highs as well, pretty well respected. And then you got one more here, and that previous resistance turned into a new level of support right here. You got a strong bullish engulfing candle to really indicate that there is strong bullish momentum coming into the market. And then you got a nice little pullback. You got another strong bullish candle. You got another pullback. You got another strong bullish candle. So it does look like there is now buy pressure coming into the market. In my personal opinion, it's formed a nice, well-bottomed floor, and we could see the USD gain a little bit more traction if we start to see some bids coming in the USD. If we're looking at DXY or more of the exotic pairs that we are going to be looking at, it's good to kind of get a comparison, not just with one pair. So that's going to be my view of the US dollar, I think, or the US dollar compared to the South African rand. I think if we do get a strong push to the upside like that, that would be a really good opportunity. I think right here, stop loss would be just below there. And then that's a pretty damn good risk reward. If we are looking at risk rewards, in my personal view, you would maybe potentially want to take some off if we are looking at some medium areas that maybe at 2-to-1 risk reward, something around there. But that would be a decent area that I would be looking for for potential entries in my personal opinion. And then this next 17.8 is the next key level of resistance, and if it's able to get to that zone, I think we could see a potential move back up here, all depending on the strength of the US dollar, mainly in my personal view. All right, so that's the first pair. Now let's go to the US dollar compared to the Mexican peso, or paired with the Mexican peso. So let's zoom out here. And it's pretty similar in terms of how strong the United States dollar is compared to the Mexican peso. Let's even go back all the way to the weekly. We saw there was a huge squeeze on the weekly chart, and it actually faked out, breaking to the downside a little bit, and then we got some massive buy volume to push the price up, where you got some huge bullish candles, absolutely broke this descending zone without a doubt, and then the chart speaks for itself. It's pretty crazy. So now let's get into the smaller time frames here. We understand the larger, huge breakout that we currently had, and then we had a bit of a squeeze here too, where we had a nice squeeze like so, and then we had another squeeze here. So this could be hopefully a continuation pattern in my personal belief, where we get a pullback, but we are looking for that next extension depending on how strong the US dollar is going to be in the coming weeks and months. All right, so let's now go to a smaller time frame. This is a similar structure to what we had with the South African Rand. Let's go to the 6 hour just to get it a little bit cleaner of a chart. All right, so similar to the South African Rand, we do see that there was a descending zone that held the price. We did get a wick on the 12 hour, but on the 6 hour and smaller, we do have the candle closure at that area. Not ideal, but still valid in my personal opinion. And then we do have that ascending zone that did get a little bit shaky, where we broke, came back into it, and then broke this key level of support. And then you got a huge move to the downside after it broke that support. But overall, a little bit shaky, but similar to the South African Rand. And then we got a move to the downside after breaking our ascending level of support. And then I was looking for this initial zone right around 23. But at the end of the day, it did break back down and then fall further to around 22, which we're currently at right now, which is still a pretty key level. We see initial level of resistance yet again, which is now turning into a new level of support right around here. So in terms of the larger time frames, not a bad place to be looking for support, but we do want to be cautious. All right, so let's now zoom into the smaller time frames here, going to the 4 hour, trying to identify a nice structural potential for a reversal, but we do have to keep in mind that we are in a pretty big downtrend. All right. So we got to firstly respect the momentum, because at this point in time, this is a huge impulse move to the downside. We didn't get any real exhaustion phase or pullback at all. So there is some expectation that we will get some level of a pullback. We're not getting strong buy volume coming into the market just yet. Right now, we're just getting a consolidation where it does look like it did break this descending zone that it did draw in, but a little tiny break to the upside of this descending trend line is not really too much of an indication for me that buyers are strengthening in confidence. It's just a corrective move that is needed in order to create a potential next impulse move from an exhaustive phase where we're going to get some level of a contraction in volatility. So in my personal opinion, the key level that the price needs to break in order for me to even think about looking at some level of reversal at all would be the 22.5 level for me to even consider it at all, because we do have a nice tight consolidation here where we're failing to make lower lows, and we are now in a series of not being able to make lower lows and being able to potentially make that same level of a high. And then I'm not really looking to trade within this range. I think it'd make more sense to see what the outcome is from that zone. And then if we are looking for a potential move, let's say we are looking for a reversal, the first thing we need to see is definitely a consolidation sideways. So we've been able to form a base, and then you may want to look for some ascending trend lines that are able to connect some higher lows, and then you potentially create an ascending triangle of some sort of bottom where you get a series of higher lows, and then you have a strong level of a roof, which will potentially turn into a new floor for us to be looking for if it does bounce back at this zone, which we identified as a key level. And then we could potentially be looking for something like that. If that comes into play, usually that retest will have a descending zone, whether either be a wedge or it'll be a descending trend line or a triangle. Whatever the case may be, it's usually going to be some level of a squeeze in volatility before an expansion in volatility. So that's going to be what we're looking for. Not really going to be looking for anything else. I have a pretty specific outlook that I want to see happen in order for me to get interested in some of these less traded FX pairs. So we talked about two things there. I'm just going to change that so we can see what's happening. And I'm fine with that. All right, now we're going to go to the Australian dollar. And also, if you have any questions, I will answer them at the end of the video, just letting everyone know. All right, so usually it's odd USD, but just because I'm looking mainly at the US dollar strength, I'm trying to pair everything with the US dollar first, so then everything involving an upswing, meaning the US dollar is stronger, I can see its relative strength compared to many of the different currencies that we are looking at within our FX analysis. So this is the USD compared to the Australian dollar. We do see that we had a massive move to the upside, and now we're getting a pretty significant pullback here, but we are, in my opinion, somewhat basing. I do think that it's definitely way too early so far because we are still making lower low, lower low, lower low, and obviously we're making lower highs like so. And then I just connected that zone to indicate a potential level where we are going to form some level of a base. But as of right now, we are still making moves to the downside, although we are getting a nice squeeze here where we have a well-respected support right here. We have our first touch point, and then we have 2, 3, and that's going to create a nice ascending or descending level of support, and then we also have an anchor point right here, 2, 3. So this is creating a squeeze in contraction and volatility where we get quite a bit of volatility here. You get massive moves, and then it's contracting into this tiny little apex. And I think if we do get some move, it might be pretty aggressive. If we melt down, that would mean that it would be weakness for the United States dollar. But if the US dollar does gain strength, we could see a move where we get a pretty tight stop loss risk reward situation where if we get an indication that there is a bullish engulfing candle, you get maybe one little pullback that you're able to enter on with a very tight stop loss, and then you have your take profit there. If it breaks above, obviously that's great, but you could have a decent risk reward in that situation there. But that would be kind of the only situation that I'd be looking for. I'd really mainly be looking at the United dollar strength or United States dollar strength and seeing it related and relative to other currencies like the South African rand, the Mexican peso, and even the Turkish lira. So let's look at the Turkish lira for the last FX analysis, and then we'll move on to the commodities, mainly looking at gold, silver, and the gold and silver ratio. All right, so I'm going to stick with the weekly here because this is an extremely large time frame symmetrical triangle that broke out to the upside and is retesting the previous resistance as a new level of support, which is extremely bullish. So the Turkish lira has been doing awful compared to the United States dollar, just absolutely demolished, and it's only looking like it's going to get worse from here, really. And if there is strength in the United States dollar, the Turkish lira is going to get absolutely demolished. So something to consider. And we can see on the weekly chart we have key levels of resistance where you have lots of wicks to the upside, and if we take all that stuff off, we can see that the actual candle closures is at, let's say, 6.5, and we do have a reaction within that weekly candle at around 6.5, previous resistance, new level of support. So we could fall back a little bit further. I'm going to stay pretty patient because if the United States dollar gets weak, this could pull back, and this is a pretty volatile pair, so you don't really want to be holding this for too long, especially with the negative or the carry costs associated with the interest rates that the lira provides compared to the United States dollar. Definitely something to consider. But overall, long bias on this pair, obviously, on this chart. It's pretty hard to be looking for any shorts when you see a weekly chart like this. So in terms of what we are looking for, I think if we do want to see this as a floor at 6.75, in my opinion, it would make more sense in order to see potentially a lower high and a lower high, at least one more, to create some level of a triangle. Even if it's like this, I don't mind. As long as there's some level of a contraction or a squeeze, that would really indicate a potential next move that could be coming in this pair. So that's going to be my analysis overall. I'm going to keep this right there. All right, so we did that. I think the next thing we're going to go to is commodities. We're first going to look at gold and silver, and then we're going to look at some less traded, less known metals like palladium and platinum. So first things first, let's look at gold, and then we'll go on to the gold and silver ratio, and then we'll move to gold. But first I'm going to get my water, and then we'll continue on. All right, so this is gold. Let's go to the 6 hour here and discuss what we're currently seeing within the market. I think this is a good time frame to kind of visually understand what happened. So gold was definitely looking a little bit weak because it did break that ascending zone right around here. So this was that ascending zone that we were initially looking at. The fact that it broke down, we were a little bit worried, but this zone right here, around $1,700, is a major level of demand. We see this descending zone that was initially a resistance turn into a new level of support. We see the previous level of support right here turn into yet again a new level of support. Obviously the lines aren't perfect. And then we also have that key $1,700 psychological level, which is a really important zone that we've been able to either break above and then hold. And on the weekly, it's a very important zone because the candle closures are basically right at that zone. So $1,700, major levels. So we have ascending zones, descending zones, and horizontal zones all in line to create this level right here, a strong level of demand. Doesn't mean it's never going to break, but it just means that there is a high probability that there's going to be buyers around this zone. So we did get a little bit of a fake out. I was surprised we actually got so low because initially we did have this a little bit more angled like so. That was my first initial draw that I did have, and then it broke down below this ascending zone as well, and I got a little bit worried. Obviously I'm not looking to short, but I was a little bit worried, definitely, in terms of the bias that I was going to have. But at the end of the day, it did move to the downside. We got a strong rejection from the buyers where the sellers tried to push the price down, but the buyers said, nope, this is still a bullish move that we're trying to continue to have. It got rejected, and then we got a strong push to the upside, came back into the wedge, had a nice tight consolidation within that wedge before, now creating our bullish push above the resistance of the wedge, which is a pretty bullish indication because we recovered from the potential meltdown of the descending wedge. We recovered, and now we're getting that strong push up that we initially wanted when we had this pattern right here. So initially we went down, and then now we're coming and rocketing back up, which is pretty bullish in my personal view. And then we do have that confluence zone where we have a resistance, 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 resistance in confluence with the horizontal level of around $1,785 to $1,800, which is our major level of supply, key level of confluence. So we have a pretty good kind of road to get from the recovery where we had that potential move to the downside, but we have recovered. Lots of buy pressure came in and held that demand area to where our next major level of supply is going to be right around here. So that risk reward's pretty good, but I do think that silver has a better opportunity for price appreciation due to the gold and silver ratio still plummeting. All right, so got a little bit of water. Not really going to get into the smaller time frames. That's basically what I see. Even if you zoom in, you're basically going to see that same structure, but on a smaller time frame. I think if you are looking for entries on gold, you would be looking for some level of a pullback on a key level of support and resistance. I think if it does come back all the way to around the 1725-ish zone, that would be a pretty decent spot because we do see it was a previous level. Let's just get our snip right here. You can see it was a previous level of resistance pretty important zone, and then it turned into a nice level of support, failed, came back, and then that could be an opportunity. That would be a decent area where you could have a pretty good risk reward, and that would be, in my opinion, the best place to be looking for longs in gold. But like I said before, silver does seem like the better opportunity, and we'll discuss that after we look at the gold and silver ratio, which is absolutely plummeted. So we saw that break in the 109-ish range for the gold and silver ratio, and after that, it fell just as fast as it went to the upside. We got a little bit of a support at around that $100 psychological level, but we are coming back into the demand zone created by this major wedge seen on the weekly chart. And then we are expecting some level of hesitation falling, where there's going to be some level of buy pressure, or there's going to be some momentum from gold that is greater appreciation than silver. This is what that chart indicates. And it doesn't mean that it's going to be bearish for the metals. It just means that it's going to be more bullish for gold or less bullish for silver, basically, meaning hesitation. But overall, the momentum is showing that silver is having a higher relative strength than gold. And let's now look at silver, because this is the metal that we are talking about that is showing some strong pushes to the upside. So let's initially actually go back to the 4-hour and discuss what we currently see within the market. So we got that huge capitulation where it was that major liquidation event that occurred in all asset classes. We got a big recovery. We got a nice little, you can call it a descending triangle. You can call it just a channel that broke to the upside if you're just going like this. You could even call it a reverse head and shoulders if you really want, like so. So you got your left shoulder, right shoulder, head, breakout. That definitely could be called a reverse head and shoulders. But this is the one that I was looking at right here. Anchor point, you have 2, 3. This is your resistance right here. And then you have your support, 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 and then you have your key level of support, and then you got a mid-range zone. It broke to the upside and then held the previous level of resistance, shown 1, 2, 3, to a new level of support, and it really held there, showing that there was a lot of bid volume able to hold that price at that zone and keep it at that level. That definitely signified for me that it was a opportunity to long, and that was a great trade overall for silver. And then we got another squeeze here. We can look at it on the smaller time frames, but we got a squeeze of this ascending triangle that broke to the downside right here. And then we patiently waited, saw a low that was not lower than this low, and then we saw another low that was higher than the previous low. We drew a nice ascending zone right here, and then from this high we formed a lower high and then a lower high. We formed that nice little trend line, and that's how we came to our symmetrical triangle that we're currently seeing on the 1-hour and 2-hour time frame for silver, and that we were able to get a nice little entry at that zone, and we're looking very favorable. Now let's look at the 1-hour time frame here and discuss what we currently see and where it could possibly go. So all right, let's get our snip and discuss the main zone that we're looking at for potential take profit at 18.5, 18.25, and 18. Pretty close to it. We got 3 levels, but 18.5 is going to be that main key level of supply. That's going to be the final zone that we expect to kind of have some hesitation to go higher up. Doesn't mean that it won't continue, but there's a key level where price has respected this zone many times before. So we're going to respect it, because obviously you got to respect those key zones that are very obvious to you if you are a technical analyst. So let's talk about the squeeze. You got a first key level right here. I was a little bit hesitant because we do have that solid level of horizontal resistance, but at the end of the day, this descending zone was really well respected, especially this zone right here. And then you got resistances a couple times, turned to a new level of support, held that support really well, and then it was in confluence with this resistance that was held level of support as well, level of resistance, pretty well all around good solid structural zone that we can see within the price action. So then we got a lot, kind of like we saw here, we broke the descending zone and then we were able to hold the support. We broke the descending zone and we're able to hold the support. Doesn't mean that it's going to be exactly the same, but in terms of structure of the price action, it's a somewhat of a similar zone, and that's how I like to structure basically all the trades. Is if we have a squeeze, we have to validate that the market structure is broken, meaning that the consolidation is broken, making a series of higher highs and higher lows, meaning that we're going to be looking for a higher high and a higher low to hold the previous resistance on the large time frame, like the 1 hour, 2 hour, 4 hour, not looking at 15-minute, 5-minute, anything like that. Don't really like doing that. So that's going to be the way we view markets, and it looks pretty favorable right now. It does look like it's moving towards the upside, and we see that gold and silver ratio still plummeting down, not really seeing any bids, or not really bids, but not really seeing any hesitation in the plummet. So we're going to continue looking at silver a little bit more bullish compared to gold. So that's going to be the gold and silver ratio and gold and silver. We're now going to look at a little bit more obscure metals. Obviously, they are still well traded. They have liquidity, but they're a little bit less known. So let's now look at palladium, platinum, and we're going to look at the comparisons of gold, silver to them, as well as within each other. So let's first look at palladium. This metal is mainly used in catalytic converters for gas-powered engines, whereas the platinum is used in jewelry, but mainly in catalytic converters in diesel engines. So let's look at the 12-hour chart. We did make a whole video of these two different metals and looking at the price action, but this is just a quick view of it right now. Let's quickly look at the 12-hour and then zoom in a little bit. So we got a very, very good, solid descending wedge with a tightening of volatility, where you got a massive expansion in volatility here. Huge move to the upside, huge move to the upside or downside, huge move back to the upside. Lots of aggressive moving, and then we get these tight consolidation, boom, slam down, tight consolidation, boom, slam down, and then you're getting the contraction where you're getting, we can see right here, there's going to be an apex somewhere. It did break to the upside, but now we're getting an even tighter contraction in volatility, which in my opinion is not a bad sign. It looks pretty bullish as long as we do get that expansion in volatility like we could possibly get to the upside right here. So in my personal view, that's what we're going to be looking for. We do have a nice ascending level of support, creating a nice level where we possibly will have some strong buy volume coming into the market, which is also in confluence with this resistance zone, also in confluence with this horizontal zone. So I haven't drawn it on the chart. Maybe it would make sense for me to draw it on the chart as well, just to show everyone how important this zone is. But this 1870 zone is going to be a major structural level of demand that we are looking at in order to potentially have bids come in and then reverse that into a potentially bullish momentum trade that we are looking for. So let's now zoom into the smaller time frames here, even at the 2 hour, because we're just really going to be mainly looking at this descending wedge that is potentially now holding a nice level of support. But hopefully you can see a nice new structure that we're currently looking at. So on the 2 hour time frame, this is basically the zone that we want to see initially break. So we could see a consolidation, a break, and then holding. That's not an indication that we're going to be interested. We want to see not only the descending zone and the descending wedge break to the upside, but we're also looking for that market structure to break, indicating that the potential momentum is moving to the upside, really signifying that the highest confluence is taken before we actually look to enter. And where is that market structure zone that we are looking for? Previous level of support, big wick down, came back all the way back up and closed at that nice level of support, really showing that there is buyers within that range. And then we see that it was a resistance right here with a long wick to the upside. So this 1950 zone is definitely going to be the structural area that we are looking to see break. So not only the descending resistance, but also this horizontal level of resistance that we do see. So when we do see the price, let's say break here, we might get a couple of retests. And once we break that 1950 zone, then we're going to be looking to potentially enter in a long for that nice basing. Like, let's say we zoom out a little bit further. Usually the move up is more aggressive than the move down, but we see a strong move up, and then we see this nice base form. And if we see that base hold, and then we get potentially a low, and then a higher low, and then a higher low that's holding the previous resistance, that is definitely really bullish in my personal opinion. So that's what we're going to be looking for, but we're also obviously going to be looking for relative strength between different metals. So that's going to be palladium. Now we're going to look at platinum. Let's go to the actually weekly, because this is a pretty important thing to look at on the weekly chart. Also, if you have any questions, drop them in the comment section below and we will answer them at the end of the video, but we're just going to get through it all first. So on the monthly, there is a huge contraction in platinum, but in my personal belief, there's a lot of time to go. But I did actually look on the smaller time frames, and we are holding a previous key level of support horizontally and out of the mid-range zone. But in terms of key levels, horizontal levels of support, we do see that this zone right around here was a support multiple times, 1, 2, 3, and that's going to be a potential new level where we broke, and then now we're going to pull back for a new level of demand. So we can see right here, we held this zone 1, 2, 3 times, really well respected, and now we broke above it, and we're now squeezing, with that being a key level of a floor, where we're getting a descending trend line, squeezing the price, making it basically have a decision either to go break to the downside, continuing its momentum, holding that key level of resistance as a projection, or we're going to break this squeeze to the upside, potentially even breaking this red projection zone. If it does break this red projection zone, that's going to be a pretty important zone that we need to break, because we can see right here. Let's zoom out a little bit more and then just take a picture right here. Key level that was held initially right here, and then it was a strong level of support. We can see descending support turning into descending resistance. And if we're able to break above that, that's going to be extremely bullish, because this is a time where there's a lot of contraction and volatility. We got a massive move to the downside. This was that liquidation event that occurred between basically all assets, and then we were able to hold that zone on the monthly chart, and then this is just a wick to the downside, indicating that there was a lot of buy pressure to keep it within our wedge formation, which is something like this. So I think that move up is inevitably going to come, but I think we could see a little bit more hesitation before that day is actually upon us. But until then, I'm just going to keep an eye out, not really going to be doing anything for that particular metal. So this is the difference, or the relationship between palladium and platinum. Palladium has been appreciating exponentially compared to platinum. So we can see on the weekly chart, huge gains here that we're seeing on palladium versus platinum, and we can see this key level at around 2.3 is a major zone that we do need to really think about. If it does break to the downside, that is not good at all. That actually would look very similar to the reversal that we had on gold before the massive capitulation event. So let's just take a picture of it and then let's look at it, just so you know what I'm talking about. Actually, I'm going to take the whole thing here. So this looks very similar to, potentially, if it does move to the downside, I'll move this over a little bit. Quickly look at gold that we already did look at. And 6 hour. Maybe a little bit less. So this is kind of that move right here. There we go. We see a huge move. The second top is higher than the first top. That was obviously a little bit move a little bit aggressive to the downside. So if we just draw in a line here, that looks pretty well similar. Right now we had this move, so we could have another move to the downside a little bit further and then a rally back up. Obviously you can't really extrapolate anything from here, but in just terms of price action and where it's going, I wouldn't be surprised if we get some level of consolidation, but then obviously at the end of the day, we are seeing this as a squeeze itself. If it does poke out to the upside and hold this level of support right around here, that would definitely indicate that we would be looking to long palladium and not be looking to long platinum just yet. I think that's going to be it for the commodities. This is palladium against gold. We are seeing a pretty nice squeeze on an expansion here. We can see it's getting more and more volatile. We can see that there's a support being held is very close to a key level of support, and we're getting a nice squeeze where we're getting a resistance squeezing the price, and then I think we could get a nice move back to the upside right here, where gold is appreciating, but palladium is appreciating even greater than gold. So good to look at relationships and relative strength in my personal opinion. All right, so that's commodities and FX and indexes done. We're now going to be looking at cryptocurrencies to end the video here. So I'm just going to stick my chart at silver and then look at BTC and then some of these alts here that we're going to be looking at. So let's first look at Bitcoin, and then we're going to look at the normal chart, and then we're going to look at the inverted. So I'm sure if you watched any videos that we've been going over, we have indicated that we are near the high of the major symmetrical triangle on the weekly chart, meaning this is that major level of resistance, this is that major level of support, and we're near the top of the price action pattern, which basically means we have, if we are to stick within the triangle, have a lot more room to the downside than to the upside. So in terms of risk reward, if we're going to continue along this triangle, the risk reward is definitely better towards the downside on the larger time frames as well as the smaller time frames, because we had a very nice wedge that appeared here, awesome trade, and then we got a potential that was a strong move from here to here, which was a good opportunity for long traders. And then now we're near the resistance. So in terms of potential trades, definitely, in my opinion, the risk reward is better from a move here to here, because if you're looking to long, you're betting that this resistance as well as this main resistance is both getting broken. And that is a bet that is not completely in your favor in my personal belief. I think if we are going to get some bullish push past this zone, I think we will get some retest, some level of a retest. I don't mind if we're not going to get it exactly, but I think for a person that is active in the markets, we will be able to capture an opportunity somewhere within this range if we are going to get a move to the upside. But in terms of risk reward probability, I think that there's just too much sell pressure within this zone that we are going to potentially at least see some level of a correction. It might hold this support and then just continue the squeeze. That I think would be a really good opportunity if we get one more move to the downside, a potential move to the upside, and then we get something like this. That would be optimal for longs. And then for shorts would be if we break the $8,500 zone. That is going to be the main level that I want to see break if we are looking for shorts. But if it doesn't break that $8,500 zone, it's going to be a little bit more hesitant. I'm going to be a little bit more hesitant to enter short, just for me, personal opinion. But we will look at the inverse chart and look at this ascending channel that we can currently see right now. And if it does reverse to the downside like here, then we could have a pretty decent risk reward situation where you have maybe a 2.5 risk reward from an entry here, from a risk just above maybe a recent high to the reward of the support zone. I don't think you'd want to bet that it's going to go below the $8,500 zone. I think you want to play within this zone from, let's say, $98,000, $9,900 to $85,000 to $85,550, $8,600. That's going to be the range that I think that is highest probability going to be looking to make moves from the high to the low or low to the high. But, betting on one area breaking before it breaks, I think, is a lower probability than bouncing until we do find that break. And then once it does break to either direction, then I will have to change my bias, adapt, and be able to be flexible and trade what the chart is showing me. If we see some continuation patterns here, that's definitely going to indicate that we would be looking to short or long. So that's my view of BTC. Now let's look at the inverse chart. This is going to basically be down is up, up is down. And let's just zoom out on the 6-hour chart to kind of see what we currently see. So this, like I said, the higher the number goes on the right-hand scale, the lower the value of BTC is, and vice versa on the upside. So hopefully you can understand that it is inverted. All right, so we can see basically talking about the same thing, but it's a good way to get different perspective of the same asset, in my personal opinion. So we're right near a major level of support where we've seen a lot of contraction in volatility. We can see that this was a major zone right here where we got a strong level of buy pressure right here to hold the price, and it squeezed, and then we got a huge move towards the upside because the price needed to make a choice, and it chose to break the resistance, because at the end of the day, in this situation, in this battle, the buyers were stronger than the sellers, definitely showing that there is strength within this ascending support that we can find on this chart. So we know time and time again there have been buyers at this zone. Doesn't mean it's going to hold forever, definitely not, but in terms of where we currently are seeing within the market, we're going to have to assume that there is going to be some level of buy pressure within this zone, and we're going to have some contraction. It's either going to break to the downside or to the upside, but that's the speculation that we're making by trying to understand the price action and understand the buyers and sellers by looking at the candlestick patterns. So let's now zoom in to see what we can currently see within this potential major demand zone. So let's zoom into the 2 hour, and actually let's go to the 1 hour. I think the 1 hour shows it a little bit better. All right, so we're getting quite the squeeze here where we're getting very tight contractions in volatility, where we're getting small moves, especially right here. Look how small the price range is from basically there to there compared to some of the moves that we've seen in the past. So very tight consolidations that we're currently seeing, which is a contraction in volatility usually experienced after is a expansion in volatility. So the key zone that we're looking at is going to be, firstly, obviously this major zone of demand, but getting a little bit more granular. We do see this descending zone connected by the anchor point, first touch, and then we see a lot of resistance at this zone. And then when we look on the smaller time frame, we can see there is a series of lower highs that is held there. That's going to be the resistance that is going to be the potential reversal for this bottoming out. And then we do see that there is this ascending zone. I wouldn't be surprised if we get another move to the downside and then we get a bottoming here, where then we can kind of create a more rounded bottom like we did in the previous structural bottom. I would not be surprised at all, but that's going to be a potential squeeze that we see right here. Could be a decent trade, you know, if we are looking for a risk reward that is, let's say maybe let's just put that there. Let's say that is like a 2.5, 2.75 to 1. That wouldn't be bad. But you are shorting right into a major level of support. You do have to understand that. But in terms of the small time frames, if you're a day trader, that wouldn't be a bad entry if you're just looking for a little bit of a move to the downside, because this is a strong level of resistance that we currently see right now, sitting at around, let's say, 9,400. Resistance does not really matter if it breaks this a little bit. We're mainly looking at that horizontal zone to see if it's going to hold. If it does hold, like we said before, could form a potential even head and shoulders, like reverse head and shoulders like this. That could be a potential, but at the end of the day, we're looking for a little bit more of a bottoming out. I think it's still definitely early. If we look at the previous bottoming out, there was a lot of time that was taken near this zone. So let's just look at it right here. Initially, we saw the bottom hit right here, and then we saw a little squeeze. We saw another spill that moved the price to that same low, and then we were able to hold very close to that zone. We did get a reaction that moved up, but we did not last there for long. We continued to go back down, forming again with the lower high contraction in volatility, while being able to hold this demand zone. And once you got that massive expansion in volatility, that definitely indicates that we have gained the initial momentum to continue to the upside. So that's going to be what I'm going to be looking for, is an extreme contraction in volatility. We are seeing that right now, but I think that could be more or less something that we see right here, like this. And then we can get another spill maybe to here, like so, kind of like we saw here. And then once we break this fully, we can get some level of contraction or something where we're going to get a tightening in volatility like we saw here. And then we can get one big pump, and then that is when we're going to be looking for shorts, if we do look for shorts, in my personal belief. So it's definitely still too early, but the bottom is slowly rounding. in terms of where it's going, but in the smaller time frames, I do not think it's ready just yet. I'm just looking at the potential risk reward that we are looking for. If you are looking to long yet again, which would be right here. Nope, that would be a short. So if you are looking to long, let's see what the risk reward would be. That would be your risk, and then your reward would be, let's say, to the low there. Yeah, 2 risk reward, not ideal. You could get a little bit of over exaggeration with some wicks that are protruding a little bit above or below this high. So you could be looking at maybe 2.5 if you're really trying to reach, but that's not a bad trade. 2 to 1 is a pretty solid risk reward. It should be a pretty dependable trade if it is a 2 to 1 risk reward, but I think that if it does move to the downside and break this little descending zone, that could create a little pop back to the downside. So that's going to be my inverted chart analysis, which is sort of in line with the overall analysis that we see here. We could see another little pop, but at the end of the day, we are knowing that this area right here is a major level of demand, which would be resistance on the normal chart. So let's now look at the normal chart. We understand that this is the inverted, and we can see that this is that potential zone that we can see. Let's just take it to the 15-minute and just draw it in right here. Not pretty precise, but let's just make it a little bit better. Get that nice descending zone in like so. I think the 1 hour might be the best bet because it's not really providing the best indication of a squeeze, really. Let's see if we'd even go to the 5-minute chart and see if that makes a difference. Somewhat. We see that there was another touch here, another touch here. So then let's get this zone and then draw in a potential squeeze that we're currently seeing. Something like this. Like that. And then that would be kind of the zone that we see in line with this ascending zone right here. So that's going to be kind of what we see. Let's just take that out and then put a horizontal zone because that would make it easier and in line with what we currently see in the market. So that's basically the reverse of the inverted chart, and that's the potential opportunity for the long. Let's discuss that yet again. So if we do break to the upside here, that could be a potential. If it does break to the downside there, which would mean it has to break towards the upside. So if we are looking for a long, that would basically, be it right here. Not the best risk reward, really. So I'm going to be not really taking that and waiting for the larger time frame in order to, like we talked about within the inverted chart, looking for shorts or looking for longs. I'd basically have to have the price break this descending zone in order for me to look for any longs within BTC, because that was a pretty good move. That descending wedge was a pretty good move. Happy about it. I'm going to take it and walk away with a smile, basically. So that's the analysis for BTC. We're now going to get into some alts here. So I'm going to get a little bit of coffee and then we'll just jump right into the alts. All right, so let's close this. And I think what we're going to look at first is the relative strength between the alts. Just quickly looking at silver here. Little bit of a move down, but we are holding. That is good to see. Let's quickly look at gold. It's pulling back. Actually, it wouldn't be a bad time. I'll look at it because we did talk about that potential zone. That would be a key level of demand. But anyways, let's now go into the altcoins, but not just altcoins, the relative strength between them. So the top chart here is Bitcoin compared to Dow Jones. I only did that just because I have Bitcoin chart right here and I can see what happened to Bitcoin. Very similar to the chart of USD, because Bitcoin's so volatile. You can basically know where Bitcoin's price was just by looking at this chart. Like that's 14K, that's 3.5, that's 4.2, that's 20K, that's the bottom 6K. If you're in the markets, you know that's the low that we had, 50% capitulation. That was a reverse. You know this if you are following the markets, but this is a good analysis of relative strength, and we can see that compared to different alts, we can compare what alt would be the best in terms of price appreciation compared to Bitcoin. And understanding where Bitcoin was when these moves happen obviously is a good thing. So in terms of Ethereum, when I'm going to be a pretty big Ethereum bull is when we have Ethereum outperform Bitcoin in price appreciation when it breaks above this zone right here. So initially, Ethereum was doing really well. Back in pre-2017, we can see right here, but it started making moves to the downside, making lower lows and lower highs. And once it broke this key level of support right here, I was definitely more interested in BTC, and then it traded below this major zone. But what happened and what I'm interested now in is the fact that we now have made a series of higher lows. This is a low, higher low, higher low, higher low. We connect those higher lows, and now we have a potential nice bottom that we can use in order to validate our breakout that Ethereum is going to outperform Bitcoin. And that breakout is going to take place when we have a breakout of this potential squeeze that we can see initially from this support, but as well as this descending zone and this horizontal zone. So that's going to be a key area of confluence right around here at 0.027. If it breaks above that, I'm going to be a pretty big Ethereum bull compared to BTC. Not saying that I'm not going to be a Bitcoin bull, but Ethereum will probably outperform Bitcoin in that regard. But until it kind of breaks the squeeze here, I think Bitcoin is going to be a good place to be in the short term. We'll look at the Bitcoin dominance chart as well to kind of validate that. So that's going to be Ethereum compared to BTC. Now we're going to look at BNB, which is Binance Coin. Let's just take away this and take away XRP, just so we have a clean chart as well as link. All right. So this is extremely bullish in my personal view in terms of the comparison of Binance Coin versus BTC. And we can see that we've had these very repeated contractions in volatility after massive expansions. So all these are contractions in volatility, and then you're getting huge expansions where BNB outperforms BTC by a long shot in these short bursts. Not saying Bitcoin is going down, but it just means that BNB is going up exponentially compared to BTC. So what we're looking for is to get in on Binance Coin when you're seeing this go to the upside or breaking, creating a expansion phase in the volatility. So you see huge expansion phase, big expansion phase. I think that next one is coming, and that is when we're really going to be interested in BNB. But as of right now, we're still in that consolidation. I don't know how far we're going to go. We could go for a little bit longer. If we are looking at the 12-hour, we can see we can continue for a little bit longer. No real indication within the charts that BNB is going to outperform BTC just yet. I think we will want to see some momentum to the upside before we kind of create that bias for ourselves. But it is looking pretty good. We are holding a nice level of support so far. You can see initial level of resistance turning into 1, 2, 3, 4. Key level of support. And as long as we're holding above this zone, I'm going to be pretty bullish on BNB if and when it does break and carry that momentum to the upside. But just not yet. All right, now we're going to look at Link and then take off BNB, which is this one. All right, so Link has been doing really well as well compared to Bitcoin. We see that we are in an ascending wedge, which is squeezing the price slowly, where we do have a strong trend line that is connecting the higher lows, where we are creating a nice ascending trend line, or a triangle, sorry, right here, where we have a horizontal level of resistance and a series of higher lows squeezing the price towards the apex. If it does push to the upside, I think we could get a strong push from Link, but if it does move to the downside, we could get a strong correction from Link here compared to Bitcoin, because this trend line has been held for a very long time. Same thing with BNB, right? If it breaks down below this support, just because it's been doing it in the past doesn't mean it will continue doing it in the future. You can't extrapolate the past and assume it's going to happen exactly the same. But it's at a point right now, in my opinion, for Link where We are undecided. We're seeing which way it goes. It, in my opinion, is heavily reliant on which way Bitcoin does break. If it does break to the upside, people could be speculating a lot more on these altcoins. We will look at the Bitcoin dominance and seeing that huge wick that occurred and that strength from the alts, that surge and then came right back down. We will talk about. But in terms of Link, definitely looks like it is a good opportunity to be looking for longs if the overall market is looking bullish. So let's take that off, and now let's look at XRP for the last one. So XRP, in my opinion, looks extremely weak compared to some of the other ones that we're looking at, like BNB, Link, and Ethereum. We compared to BTC, we see that we have this descending zone that is not super well respected, but overall we were looking at this horizontal zone at around 243. And let's just zoom right in here. We held this for a nice level, for a potential level of support. I really wanted to see it hold in order for me to even think about XRP as a potential asset to look to trade or invest in. But as of right now, it is bleeding really, really bad compared to a lot of these other alts. Doesn't mean that it will be terrible forever, but in terms of what's been happening recently, XRP has been getting demolished by basically every single major alt that I would like to trade or invest in that has enough liquidity that I feel comfortable putting my money in. So in my personal belief, XRP is the least strong out of the currency or out of the cryptocurrencies that we are looking at within our analysis. What you can also do on your own time is look at the relative strength between different alts. You can easily do this by just typing in, for example, let's say you want to look at the relative strength of XRP compared to, let's say, BNB. You can do BNB USDT compared to XRP USDT, and then that will give you a comparison of BNB, which is Binance Coin, to XRP, which is Ripple, and we can see that it is obviously way stronger for BNB. If this chart is going up, it means that it is stronger for BNB compared to XRP. We can even do another one. Let's say we want to do a little bit less common of a coin, XLM USDT compared to XRP. I haven't actually taken a look at this yet, but let's look. All right, well, something happened, but let's look at what we currently see on the daily. So basically even for, a whole year and a little bit here. So they're kind of at even, but XRP obviously has a lot more hype, a lot more community. In my personal opinion, there's a lot of people who absolutely love XRP. That's totally fine. I have nothing against it, but in just technically speaking, it's pretty weak compared to the other alts. All right, here. So let's now look at some just longer term time frame stuff in terms of these alts here. Let's get this out. Just going to look at Ethereum and XRP, I think, just to close it off. So in my opinion, it's looking potentially good, but I would rather stick to BTC, and we'll get into actually the dominance chart before getting into the alts, because I think that's a good place to start. Before getting into the alts, let's look at this guy right here, which is a Bitcoin dominance. So we can see that we did get rejected extremely aggressively on the key level of resistance here. You can see that there was a huge rejection that pushed the dominance of BTC back down. It did hit a high of just under 70% of the entire cryptocurrency market cap is just Bitcoin. That's a significant amount. It's like saying the entire stock market, 70% of the stock market in the United States is from Apple, or saying something like that, right? That's a pretty crazy statement to say, and that company would be a huge chunk of the overall market. Same thing with BTC. If BTC is 66% of the overall market, you better be sure that you're tracking the number one asset in that sector, which is Bitcoin. So in my personal belief, if we zoom back down a little bit or zoom back out a little bit, we see that there is an ascending level of support that is creating a series of higher lows. So we see a low, higher low, higher low, higher low, higher low, higher low. I'm hesitant to be really looking for alts because we're seeing a significant strength in Bitcoin that is taking back the market share of the overall crypto market. So I think we could see another move up here where we see a expansion phase or a push this is a contraction or an exhaustion phase. We see another expansion phase or a push, and then now we're seeing another contraction where we have a descending zone right here, where you have anchor point, you have second touch, we have the third touch. We see that zone right here, and then we see a nice bottoming or a nice level where buy pressure is able to come into the market and keep this zone from making higher, or keep this zone making higher lows. So in my personal opinion, I think that BTC is still looking really good. If this starts to go to the downside, it doesn't mean that Bitcoin is going down. It means that Bitcoin could be going up, but a lot of these alts are going up exponentially, which would be extremely bullish. So if we look back all the way when this chart was going down significantly, that was when the bull run was at its roaring time back in 2017, and especially late 2017 is when we had those massive moves to the downside. And this is when you're looking for super crazy risk rewards where you're getting like 20 to 1, like unbelievable risk rewards. As long as you're able to kind of let them run, they can really ride. But obviously, you gotta understand when that time is, and it's definitely not now. Bitcoin is slowly accumulating more of the market share, so I'm a little bit more hesitant on entering any alts until we see that shift to the downside. I just feel more comfortable looking at BTC for strength because it is gaining back market share. In my personal belief, Ethereum is a little bit of an outlier in my personal belief because Ethereum is by far the second best by a long shot in terms of a investment in the crypto space. I think that BTC is number one, with Ethereum being number two. So I'm going to look at the market in that perspective. So now that we understand why I'm looking at BTC a little bit more than alts, let's now look at the alts here. And we can see that it didn't recover nearly as much ground as Bitcoin. So there's less money flowing into it, but it could be a good thing because it allows us to get a lower price, which would then create a opportunity where we have some significant price appreciations compared to Bitcoin. So obviously there's more risk, but there's more reward. But in terms of where we're currently seeing right now, the major level that I want to see Ethereum hold is 190. As long as the price holds this zone, it's looking really good. I did see a squeeze that did break to the upside within this structure right here, but I was a little bit hesitant on entering, and now we've broken the previous resistance as a new level of support, which is pretty bullish. And I am overall bullish in the cryptocurrency market, but I'm a little bit hesitant because we are nearing that key level of resistance on BTC. But in terms of what we see on Ethereum, we had some descending trend lines that were somewhat respected. I'm mainly looking at these horizontal zones and the smaller time frame price action patterns that we see on like 6 hour, 4 hour, hour charts and stuff like that. So we saw this squeeze right here, like that, but we did see a major structural resistance here as well, so we can just extend that all the way. And then we just got to move to the upside where we got a push breaking a key level of resistance, not only descending but also horizontal, where we have that key level of resistance all throughout this chart. And that same zone was a major level of support where we have a huge price action pattern that broke down. And when that broke down of that key level of around 190, or sorry, that's not 190, the bottom now is 190, this one's 216. 216 is that key level that we needed to break in order to call it a breakout, and that's exactly what happened. So in my personal view, it does look pretty bullish because it did break that key zone of around 216. And if we go to the 12 hour, that's going to be a nice wick, and we've closed above that zone. So if we're just looking at the structure of the price action on the 12 hour, it looks extremely bullish, or it should in my opinion, because it does for me. I don't know about you, but for me it looks more bullish. So let's just go like that. We could take that away just to make it a little bit cleaner of a chart. So overall, it does look pretty good. You got a major level of resistance at like 247, 249, somewhere around there. So if you are looking for a long opportunity, let's jump into the smaller time frames here. Let's even go to the 1 hour time frames. You're getting a nice squeezing of consolidation. Let's even go to the 15. Let's make this red and then just clean it up quite a bit so it does look pretty good. And then get a nice little projection that we can see right here. Get our Nice projection, and then get it red, some live TA for everyone. And that's the overall structure that we're looking for. If we get a nice break above this zone, I think there's a high probability chance that we could get another significant move kind of to the upside. This is obviously, you got to be in confluence with the overall structure of what Bitcoin is doing. If Bitcoin is able to break down in that chart, I guess if you're looking at the normal chart, if Bitcoin is able to break back up and test those highs of $9,600, I think Ethereum could move to the upside here. We could get a decent risk reward situation, but at the end of the day, I think you are wanting to be a little bit more patient because Bitcoin is right at a major level of resistance. So that's going to be Ethereum. I think there is a potential for a continuation pattern, but overall, I think it'd be safe to be a little bit cautious until Bitcoin does provide a direction, because right now it's in a consolidation, and you can trade within the consolidation, but betting on a resistance breaking or a support breaking in which both zones are very well respected is a little bit less ideal for a probabilistic situation that you want to find yourself in as a trader. You want to be able to have a high probability of being correct, and in my opinion, the best way to do that is to be patient and wait for the break, retest, validation, squeeze, and you get that contraction after the breakout, and then you want to be looking for that initial expansion of the volatility after the contraction when it breaks a major zone. Those are the situations that you want to find yourself in my personal opinion. So that's going to be Ethereum. Now we're going to look at XRP here. It did break the descending zone, but we're still holding a potential head and shoulders that we can see. So I'm going to delete some of these charts. Didn't really work out perfectly in terms of the structure of that, but I don't really mind. That's okay. I'm not really trading XRP too much here. So that's going to be that zone right there. We could just reconstruct it in order for it to work. That's not a problem. The main zone that I want to see break is the neckline, which is around 18 cents. When that breaks, that's going to be the completion of the head and shoulders. And we can see another head and shoulders that appeared a little bit earlier in February, which we can look at as a potential opportunity that could come like here. So this is a head and shoulders that appeared. Obviously, you see the left shoulder, right shoulder, and then you see a big head right there. And it's probably not going to be this severe as a potential sell-off, but this is, I guess, something that we're looking for if we get our ghost bars, and then we're looking for that breakout, and then something like this. I don't think it's going to be as aggressive, but that would be something that we could be looking for, something like this. And I think that would make sense on the large time frames, because if we do look at where it has gone, that doesn't seem like that would be a crazy move that would appear, because we've seen it in the past and we saw head and shoulders at the top. We made a lower high and it's looking pretty weak. If Bitcoin does start to move down, we've known because of the relative strength analysis that we have done that XRP is definitely weaker compared to a lot of the different alts that we are looking at. So that could be a potential. I am looking for a nice retest at that 18-cent range if it does break, because that would be the completion of the head and shoulders pattern, which would be a really good opportunity if we are looking for shorts within the market. Doesn't primarily have to be Bitcoin. Bitcoin could look weak. It could move down a little bit, and then XRP could really go down. Generally, Bitcoin is going to set the trend, going to set the overall theme of the cryptocurrency market, and then some coins, if Bitcoin's moving up, some coins will move up exponentially, where it's going to really move up, and then sometimes if Bitcoin moves down, you're going to get some coins that are going to move down exponentially. So overall, BTC is the trend maker, and then these alts will be more volatile, but if you're able to find really good opportunities, they could provide some really good risk reward situations and structures that allow you to gain solid profit over time with a series of trade, as long as you have good win-loss and good risk reward. So that's going to be the overall video for today. I will close off the recording, but I will go over every single question here that is within the questions on TikTok and YouTube. So thank you very much for watching, everyone. Really appreciate it. Until next time, have a good one. If you enjoyed this video, found it informational, educational, it would be great if you do subscribe and like this video. Subscribe to our channel so then you can get more videos like this, as well as support the community in some sense, I guess you could say. So thank you very much, and until next time, have a good one, traders. All right, so that was the end of the video. Going to be looking over a lot of questions that came in here on TikTok. Or it seemed like it. What are you doing? By ZY. We're looking at a bunch of different charts. Looked at a bunch of different asset classes, commodities, FX, equities, not single equities, but indexes, and also cryptocurrencies, which we ended off with. All right, let's see what else is asked within TikTok. Share the current live, thank you very much. Send big love by Rusty, thank you very much. Hello, how's it going? A part. Ryan, what's the name of the format you use on here? This is called TradingView. This is the charting software that I use. It's an online charting software that is free. You will have ads if you don't pay for the full version, but if you want a good understanding of how the charting system works, it offers a tremendous amount of tools and different ways to analyze markets, different indicators if you're into that. I just think it's phenomenal, and it is by far the best charting software that I've ever used. I can't have any negative things to say about TradingView. In my opinion, it's my most used app ever, by far, which is awesome. Okay, so yeah, let's see, continue here. What's your background? Like in terms of trading or in terms of life? I was in IR, investor relations, and was in that realm of work before going into trading. I was trading before, but I did a lot of Reg A plus offerings and basically did that stuff looking at basically providing people confidence and reassurance of investments in pre-IPO, IPO investments, and more or less that. But my initial desire was always to trade, for sure. In terms of like work, it just I don't know why. I love it. Freedom, the ability to be my own boss, the ability to make my own hours, the ability to work from home, ability to work just off of Wi-Fi, the ability to have critical thinking in line with like mental stimulation, which is very challenging but also very exciting and fun, and being able to be extremely in tune with world economics on a global macro scale is, in my opinion, really interesting. Let's see, look here. What are you thinking about silver? So we already talked about silver, but I'll just quickly go over it again. I'm still extremely bullish on silver. Overall, I think the metals our precious metals are doing pretty well, gold and silver. Gold was a little bit worrying for me when it broke down below a minor level of support, but it did come right back, seeing a shit ton of buy volume coming, which is awesome. And now gold is definitely chugging along, making a series of higher highs and higher lows, which is really good. And the gold and silver ratio is absolutely plummeting after breaking the 108 level of demand. And I think we will find some level of support at like 97, 98 as a gold and silver ratio, but I'm still really bullish on silver. I do have targets of, let's look on here, 18.25, 18.5, or 18, 18.25, and 18.5 is the main levels, and then the key major level of resistance is 18.5 that I currently see for silver in the upcoming move, in my personal belief. So yeah, I'm definitely bullish on both of them. Ryan, besides Forex, not sure what you mean besides Forex. Oh, that's what you mean, I guess. What's the name of the format you use on here besides Forex? I'm not really sure what you mean by that. Ryan, thank you. I'll jump on it right away. Yeah, no problem. So that's going to be the end of the video. We don't really have any other things to go over, really, in terms of questions, in terms of price action. So thank you very much for watching. We really appreciate you coming down and being able to join us for another global macro update. So until next time, have a good one.